Time once again for the Farmweek Market Report. Zach Ashmore is here for our monthly dose of supply and demand. The report just dropped. Zach's on it. Zach?
Thanks, Mike. Market's still rising, but we saw a little break in the grain markets. Corn up, while soybeans and wheat down. Live cattle also rising. On top of that, the WASDE report just dropped. But first, let's take a look at the numbers. Last week's biggest gain, lumber, getting back up to the COVID supply prices we saw last year. But corn also up, not as high as late November last year, but still having an effect. Last week's biggest loss, soybeans, strangely enough, but not by a lot, about 4 cents. This month's WASDE report just dropped. As we've said, stocks and exports the biggest takeaway this time. Soybeans and corn still down in stocks while exports up. Markets already responding. Both commodities showing an upward trend. Let's jump in.
U.S. wheat unchanged. Hard red spring wheat and white wheat exports are raised. Hard red winter wheat exports are reduced. Durum wheat imports are raised. Durum and hard red spring food use are raised, while hard red winter and soft red winter are lowered. Global outlook is for greater supplies, increased consumption, higher exports, and reduced stocks. Global trade raised 1.1 million tons to 194.8 million tons overall. U.S. corn outlook is for higher exports and lower ending stocks. Exports raised 50 million bushels, reflecting historically large corn purchases by China. Global outlook is for higher production, lower consumption, and greater ending stocks relative to last month. Foreign corn production up, mostly in South Africa, offsetting lower production in Paraguay. U.S. rice projection is for stable supplies and domestic use, lower exports, and higher ending stocks. Global outlook is for larger supplies, higher consumption, increased trade, and reduced stocks. World trade is raised 0.9 million tons to 46.3 million as higher exports by India more than offset reduced exports by Thailand. U.S. soybean outlook is for increased exports and lower ending stocks. Soybean exports are projected at 2.25 billion bushels, up 20 million from last month. Crush unchanged. Global soybean supply and demand forecasts include higher exports and lower ending stocks. U.S. livestock forecast for total red meat and poultry production is raised from last month on higher forecast beef, pork, and broiler production. Turkey production forecast is unchanged, egg production reduced from last month, and milk production raised. Global beef export forecast raised, turkey export reduced from last month, pork, broiler, and egg export forecasts remain unchanged from last month. U.S. cotton supply and demand forecast shows slightly higher exports and lower ending stocks relative to last month. Production and domestic mill use are unchanged. World cotton forecasts show higher production, consumption, and imports led by changes in China. World trade is projected 350,000 bales higher than last month.
As you saw, corn and beans the biggest news from this past WASDE. That information has effects on what farmers choose to plant. Another factor, weather, and a bit of feeling, as it were. Market analyst Mark Gold lays down the details based on current price changes and speaks on how farmers make the big decision.
Well, I've seen estimates as high as 97 million acres on corn. The bean numbers, you look at the corn-bean ratio, it's about 2.6 on new crop beans and corn right now. Certainly an incentive to plant some beans. But I think it's going to be a case, as it always is, what's the weather in the spring? If we've got great weather in the spring, farmers are going to get in and plant corn. And they'll plant 95, 96 million acres of corn, and the rest will go into beans. Farmers love to grow corn, raise corn, harvest corn. So I don't know that it's a matter of economics per se. There's a lot of emotion involved in that. But these prices are good, $4.50 corn and $11.50 beans. Nothing to turn your nose up at. But I think price-wise, the beans are favored, but emotion-wise, the corn's favored.
On the cattle side, prices rising as well. The WASDE report pointed out lower egg production due to higher grain prices. Chickens got to eat if they're going to produce. The same applies to other livestock. I spoke with MSU Extension economist Josh Maples. He says price changes affect producer choices. Makes sense, but it's a bit more complicated than that. Here's Josh with the details.
You know, we're looking at higher grain prices right now, and that certainly impacts livestock prices, not just cattle prices, but anything that consumes feed to grow. But, you know, cattle, there is some flexibility throughout the cattle production system, and producers are going to make adjustments in response to these higher prices. And at the cow-calf and stocker levels, you know, we're likely going to see a shift towards more forage-based production, maybe some other feedstuffs, some alternative feedstuffs. anything to find a cheaper way to add some pounds to these cattle at that stage. The feedlot stage is where it gets really interesting. The feedlot stage is heavily dependent on grain to finish those cattle. The biggest decision there, Zach, is in terms of how heavy are the placements. So do you can typically place anywhere between the 600 to 1,000 pounds, or kind of the normal range. Do you want to place smaller feeder cattle and feed them, which takes longer to do that and requires more feed? Or would you rather purchase heavier feeder cattle that somebody else has already added a lot of the weight to, that requires a shorter feeding period and less feed? That's going to be an important question moving through this year as we're facing these higher feed prices. I suspect that we're going to see higher demand for those heavier feeder cattle, and that's going to require that the pounds be added somewhere other than feedlots. So whether that be back in a stocker stage or back on the cow-calf producer, or even keeping cattle a little bit longer to add those pounds in a different setting. We're going to see that through prices for different weight cattle. So I suspect that the pressure is going to be most heavily seen on the price of lightweight feeder cattle, more so than the heavier weight cattle. And that's, again, a direct result of the higher feeding costs that feedlots are going to be facing.
With these challenges moving forward, the big pinch comes from an uncertain question. Will we resupply our grain stock, or will prices continue to remain high? The age-old ag answer depends on the weather. If this is a good weather year, prices are sure to follow. And that's it for a deeper look into the markets.